You've heard of Uber, the $200 billion behemoth for the rideshare economy. You've heard of Block, formerly known as Square, which popularized digital payments for small businesses. But what about the company that's building both, all in one app, for one of the world's fastest growing regions? We're talking about Grab, a Southeast Asian super app. They've gone from just a ride-hailing service to a powerhouse in food delivery and a major growing player in fintech, with a seamless point-of-sale system for merchants and a digital mobile wallet for in-store purchases. They truly are becoming a super app. With the company proven profitability, is now the time for us to buy this emerging market super app, or is the opportunity too rich? Let's break it down looking first at the two tailwinds driving this growth. The first tailwind for Grab is their growth and diversification from a ride-sharing service into a full-fledged super app. Back in 2018, Grab had successfully been able to kick Uber out of the market when Uber agreed to sell their ride-sharing and food delivery assets in the region to Grab. Just like Uber, though, has expanded into new verticals, unlike Lyft, Grab has focused on pursuing new verticals as well, particularly financial services. Getting into as many verticals as possible is an advantage, as being able to market and get a user who can download the Grab app once and schedule a ride to work, but then also that same customer will use it to do other services, makes the profit for each additional service much higher, since the cost to acquire that customer is spread out across more transactions. A super app model mainly works by driving transaction growth to lower the overall cost it took to acquire that customer. Now, having a low customer acquisition cost is a key benefit for a business, as we can see here with New Holdings. Their cost to acquire is around $5, which you can see here is magnitudes lower than competitor banks. With this lower cost, New can extract less revenue from each customer, which allows them to draw customers that were neglected from bigger banks that had higher cost models. But despite this, they can still have better margins than the bigger banks. Low cost is a key competitive advantage. The second strength of a super app is having a multi-service ecosystem that drives user counts and activity, as itself is a business model. Nubank literally partners with other businesses and can say, we have over 100 million active members that we can drive eyeballs to your product. Do you want to partner with us? Another example is Instacart and their ads business for their virtual grocery store, as it's now $1 billion high-margin business. The reason it's so successful is it can go to food manufacturers and drive an audience to the product. Having access to active audiences is a high-margin asset, and super app companies can use that data or audience to get business from external customers. Last point on super app is it allows Grab to shift from the lower margin mobility and delivery segments, which today are 85% of its revenue, to financial services, which for Central Asian super app Kaspi has been a primary reason why Kaspi has greater than 35% margin. Now, the second tailwind that makes me excited about Grab is their operations in a high growth region, Southeast Asia. According to a report by HSBC, Southeast Asia is expected to grow into the fourth largest market in the world by 2030, with GDP growth around 5% annually, which is greater than the GDP growth of the United States and China. For super app to be successful, it is also essential for there to be a digitally comfortable population, which today Southeast Asia has a young population between 15 to 34 of nearly a third of its population. This will be a large pool that can participate in the smartphone-driven economy. So far, I've talked about two very strong tailwinds for Grab. First, that their profitability can increase exponentially with increased fintech revenue, which, with the flywheel impact, will drive even more financial users into mobility delivery transactions. And second, the growth of Southeast Asia with a digitally comfortable population and with 60% of its population underbanked will be a major tailwind. For me, the biggest risk to Grab's success as a super active choice for this region is current e-commerce leader, Sea Limited. Similar to Mercado Libre, Sea Limited started with an e-commerce platform and created a payments platform to be integrated. Sea Money has since expanded into an offline payment processor. The strength of Sea Money is its buy now, pay later will have decisions based on smarter data, since it can leverage its vast e-commerce data set. Plus, with it being the de facto payment method for its e-commerce platform It gives C Money an easy to acquire way to get customers who just use the e-commerce platform. For me, the only chance Grab has to compete is to retain its drivers, merchants, and riders as clients. It's a bet on which segment will be used more, e-commerce or e-mobility. Perhaps Southeast Asia's market will be big enough for both to offer fintech services, which to decide whether the risk or reward is worth it. It will come down to valuation. Now, before we talk about valuation, please review the disclaimer in the notes below. We're not financial advisors, nor should anything we say be taken as financial advice. Also, if you like content like this, please help us out and click like and subscribe as we aim to analyze the most innovative and long-term focused companies twice a week. Now let's look at Grab's valuation. On the business lifecycle, I have Grab as in the early growth stage. Yes, Grab is mature for food delivery and mobility, but is early on in its journey to become a super app. Based on this, its PE and PEG ratios won't be relevant as Grab is reinventing their business with higher margin services that drive a higher valuation. To evaluate Grab, I'll project out their revenue and earnings through 2030 to set a market cap estimate and determine if it meets my target returns of greater than 15% to determine if it is a good value for valuation. For a 2030 price target, let's assume it continues growing at its rate it's been growing the past couple years, around 20%. As they saturate the market for mobility and delivery, this growth is dependent on them capitalizing on vertical adjacent segments as a super app. Now, this would mean by 2030, Grab's generating $7.7 billion in revenue. Now, let's assume Grab becomes a primary high margin fintech super app and has 20% net margins, higher than the less than 5% now, and higher than the 10% of Mercado Libre, but not the gold standard of Kaspi at greater than 35%. Now, for 20% revenue growth and 20% margins, I believe a 25 PE is fair, which applying that gives Grab a $38 billion market cap. Based on this 2030 market cap estimate, with Grab at a 26 billion market cap today, this would mean I believe at most Grab's returns would be 8% annually, below my margin of safety target of 15%. From a leadership perspective, I would give Grab a strong. Their co-founder, Anthony Tan, is still the CEO and he is pushing their strategy to evolve into a full-fledged super app. To be on the level of Nubank's David Veliz and a very strong, I would need to see this strategy be executed. For a valuation perspective, I give Grab a week. From our 2030 price target, it showed Grab had a baseline of an 8% annual return below the 15% growth target I would like to see, to give a margin of safety. From a revenue and profit growth, I would give Grab a neutral. Currently, Grab has grown revenue at around 20%, which is nice overall, but compared to Mercado Libre, New, and Kaspi's roughly 30% growth, it is just not as impressive. For a total addressable market, I do like that Grab is gaining optionality into other verticals besides mobility and deliveries in the fast-growing Southeast Asian market, so I give this a strong. From a tailwinds perspective, Grab gets a very strong, as it can benefit from the two tailwinds: the flywheel approach from the growth in its super app strategy, and second, the growth of Southeast Asia as the fourth largest economy. Overall, I do like the emerging market play, as currently we do not have any exposure to the growth of Southeast Asia. However, with Grab's current valuation, coupled with its competition with C Limited for fintech leadership in the region, I do think we should pursue other companies with better risk-reward upside. What do you think, Dad?
Thank you, Scott, for that review of Grab. Yes, I'd like to go over my evaluation of Grab, symbol GRAB. It's a very easy one to remember. Okay, for the company fundamental, it doesn't have a dividend. The beta is 0.84, which means it's 16% less volatile than the S&P 500. The market cap is around 25 billion, and the earnings come out sometime late October, early November. So for that, I give it a neutral to positive. The next one is for earnings history, and for the last four earnings, there's been three of the last four have beat. So that's positive neutral. For the financials, the net profit margin is only 2%. Debt to equity is 6%, and it doesn't have a peg ratio. So I give that a neutral. And then the technicals for the Bollinger Band, as you can see, it's hugging the upper band. Now that's very unusual because it's supposed to be within the upper band and lower band 95 out of 100 days, theoretically. So anyway, I don't see how it can continue this pace. So it's what you call a breakout. It's almost like it was consistent, the Bollinger Band, and then it just became very wide. It's called a breakout. So I feel I wouldn't consider buying it until it gets to the middle band, which is the 20-day moving average, which is around 5.4 at this time. Okay, we'll look at the moving average. The 50-day moving average is above the 200, which is good. The 200-day moving average is the slope is positive, and the price is above both the 50-day and 200-day, which is very good. And then I also look at the slow stochastics oscillator, and it's at 88, which is considered overbought. And other things I look at, the MACD is neutral, and the unbalanced volume is positive. So the stock technicals, I give it a neutral. It concerns me that it's hugging the upper band this long, so I really feel that it's going to go down to the middle band. And for the analyst coverage, the analysts I cover, there's one strong sell, 5 holds, 6 buys, and institutional holdings are 60%. So I give that a neutral as well. So my take, Scott, looking at everything, I just don't see how it can continue this pace. Maybe it can. I don't know. But in my opinion, I think it's going to go back down to the 20-day moving average, which is around 5.4. So I wouldn't buy it now. I'd put it on a wait list and wait till it gets back to the 20-day moving average and see how it goes from there. So back to you, Scott.
Thanks, Dad. Overall, we will not be adding Grab to our community portfolio at this time. The secular tailwinds are nice, but the company at this point seems too overvalued for our liking, especially with my dad's technical feedback. With that said, thank you for watching. To help us out, please click a like and subscribe. Until next time, wishing you the best of luck in your investing journey.